We are experiencing the sharpest turn in the housing market since the 2008 crash as mortgage rates soar above 6%. Will it get worse considering the Federal Reserve meets September 21st and all signs point to another 75 basis points, which is 0.75% increase. So if you are curious as to why interest rates have doubled since the beginning of the year, click the card above to see what actions the Fed took to wreak havoc in the housing market. Now, if I were a gambling man, and I'm not, I'd be placing my money on the idea that the Fed is intentionally trying to pop the housing bubble they have created. More on that in another video. So do this channel a favor and like this video so the algorithm shows us some love, and subscribe to this channel. Also, click that bell right there to get notified so that you stay up to date on what is happening in the housing and financial market. Welcome to Ask the Lender. If you are new here, my name is Rod Ferrier and I am a licensed loan originator in Virginia and Maryland. Make sure to leave some feedback in the comments below so that I know what you are interested in learning more about. The purpose of this channel is to help my audience stay informed so that they and their families can build generational wealth through real estate, pay less money in taxes, and navigate through some of life's challenging financial moments. Make sure to stick around until the end where I reveal what steps you should be taking and what path you should be avoiding if you or someone you know are looking to buy a home. Mortgage rates are now above 6%, the highest they've been since 2008. With the Federal Reserve poised to raise its benchmark interest rate again next week, they could move even higher. But some experts say they could maybe basically stay the same. See, the Fed is expected to increase interest rates by 75 basis points in its key rate in its ongoing bid to bring down inflation. The latest Consumer Price Index, or CPI, shows an increase of 8.3% year over year in August, indicating inflation is still hot. If the CPI were even 0.1% lower, the Fed may have been looking at a 50 basis point increase. Mortgage rates have roughly doubled since the start of the year due to high inflation and jumped again this week, with the average 30-year fixed rate rising to 6.28%, its first time over 6% since November of 2008. Both rates jumped after this week's inflation report. That move might have been in anticipation of the Fed's action next week, meaning we might not see much movement after the Fed hikes rates. It's most likely already priced in ahead of time. If the Fed does what everyone expects them to do, I personally don't see the 30-year fixed rate increase. I think what happened after the CPI report was that reaction baking in. Full disclaimer here, I'm not a financial advisor, and your mortgage rate will depend on factors like your credit score, your income, and how much money you are able to put down on a new home in the form of a down payment. So if you have questions, feel free to reach out or comment below. I can help point you in the right direction so that you feel confident you are making the best decision for you and your family. So what can we expect from the Federal Reserve next week? The Fed won't make its decision official until September 21st, but experts often have a good idea of what's coming and how it might affect mortgage rates. Interest rates have been bouncing around for basically the entire summer, so I don't think buyers are going to be very surprised by what's happening. It's just more of the same, right? But what is worrisome is that the Fed might have to go so far as to put us into a recession to stop inflation. Experts agree that the Fed is likely to hike rates into 2023, but the question is, how much? According to former Treasury Secretary Lawrence Summers, the Federal Reserve may have to eventually raise the interest rates above 4.3% to control inflation. The Fed does have the full go-ahead to raise that 0.75%, and it even added to the conversation the potential for maybe a 1% increase, which, although personally I don't think that's likely. By making it more expensive to borrow money via higher interest rates, the goal is to curb spending. So these higher rates have already slowed the housing market down by making it more expensive to own a home. Consider this. With a 3% fixed mortgage rate, a 20% down payment, and a 36% debt-to-income ratio, a household with $100,000 in annual income can qualify for a $721,000 house. Now, this was back in December in 2021. At 4%, they could qualify for a $649,000 house back in March. Now in April and May, 5% you could qualify for $587,000, but now at 6% you could qualify for a $533,000 house. So for roughly 75% of American home buyers who use mortgage financing, that's a 20% drop in purchasing power since the start of the year. Unless wages come up or interest rates come down, home prices will need to fall a lot in order for more Americans to buy a home. If you or someone you know are in the market to buy a home, should you wait or should you buy now? Well, look, that depends. Are you able to afford higher mortgage payments for 18 to 24 months while you wait for rates to come down so you can refinance? Well, if the answer is yes, then it's likely a good time to buy. If money is tight or your job is not secure, especially in a recession, then it may be a good idea to wait. There are some people who predict another major housing market crash just like in 2008, but I'm not sure that's likely. I could be wrong, but look, people who own homes right now are in a good financial position, generally because they got low rates. And the criteria for getting a mortgage is really high now. It's not like during the housing market crash where people were getting, these junk loans that they had no business getting. So if you have questions, make sure to leave them in the comments below. Know someone looking to purchase or sell a home? Share this channel with them to help them stay informed and know what's going on. And in closing, make sure to subscribe to this channel and like this video so that others just like you can benefit and make better decisions. Also, be on the lookout for a video update next week after the Fed meets, and we'll discuss how that meeting impacted the housing market. If you are interested in learning more about why the rates have doubled this year, click on that video. Actually, it's going to be down here in the closing screen at the end. See you next time on Ask the Lender.